welcome back guys to the channel. And on this video I'm basically going to be breaking down this full smart money concept strategy. Now first and foremost, we always need to have our guidelines, our rules, our principles that guide us through the whole thing, right? And those things being particularly basically three major things that we're always looking at in the MMC footprint strategy, which is structure, S&D, and of course confirmation. Right, so this is the root and the stem of our plant, right? This is where everything comes from. Now first and foremost, we need to have, as usual, a structural narrative. Now of course, in this market, we need to analyze this market in terms of its structural play and see how everything is going, right? So first and foremost, we had this series of high highs and high lows being formed up until here, where price failed to break this structural high and then ended up just becoming an equal high or just a liquidation move, and then price instantly came down and then took out this previous structural low to make it a break of structure, and then price just sold off of this area of supply here and then started creating no lows. Now from here we had this major this break of this major structural here, which indicated so we had that as a BOS in the institutional order flow, which indicated that price was pretty much gonna just flow bearish from there. And we also had this area here, this potential area of supply in here, right? The last buy to sell, right? Just like I taught you guys in the previous video, that last area, the last buy to sell, which price normally comes, mitigates it, and then from there price can accumulate and go to the downside. Now so let me just remove these. Okay, let me try again. Boom. Okay, so price from here just comes up, goes a little bit above with only a wick, and we know that as absorption or just a simple liquidity grab by smart money. Now the basic area that I want to show to you guys how we trade, how do we do everything here at Green Pips Academy, is this area here, right? When we had this series of lower high, it's a lower low, right? And then we had this series of intermediary higher high, right? Higher low, higher high, higher low, higher high, and then from there we had this break of structure right here. And from this break of structure, price was simply telling us that, hey, you know what, I'm no longer going bullish, right? I'm going bearish from here. So we knew that price from here wanted to go bearish, and just a case in point, we just needed to find that area from which price was simply gonna go bearish from, right? That last buy to sell, which price was gonna mitigate in the future, and then after that mitigation, price could accumulate and then distribute off of that area. Now that area simply being this area here, right? The last buy to sell, right? Like I said, the pivot of the wick, and this is just a hidden demand zone. Now from this and of course, from there, our targets, our major target was this overall low here. We'll just mark it as our NLR, or just next liquidity run. Let's just make this big, right? Why can't we just make this big? Boom, next liquidity run. So from there, we're basically targeting this area here. Now, of course, let's just head back to the 15-minute time frame, and then we want to realign, like I always say, what we do is called multi-timeframe analysis. Sorry, my internet is a little bit shaky, I don't know why. Okay, so we always do multi-timeframe analysis, and we just need to make sure that our multi-timeframe analysis aligns with everything we're doing. So with shifting now to the 15-minute chart, which is now the intradays, because I'm a day trader, right? I use intraday timeframes, and most of my my guys here do that as well. So we're pretty much we're just gonna cut this area here. Let's just cut it from there, and then let's have this clean price action here. So from this price action here, let's now analyze and see what have we got here. So basically we had this break of structure. Let me just make this small. We had this overall break of structure that originated from that high, and then we had this area here as our last buy to sell, and then price now comes and taps our area of interest, or our POI. Okay, so from price tapping now our POI, let's analyze what's happening in here from an intraday perspective, right? So let's just make this like that and there. So from an intraday perspective, we had a low, higher high, higher low, right? Higher high, higher low, higher high, higher low, and higher high. All right. So at the moment, we're currently ranging from within this area here, right? All right. So with that being our range, let's now go to the 1 minute time frame and see what's happening in here, right? From the lower time frame perspective, since price has now touched our POI, right? So the moment price touches our POI, we just head back to the 1 minute time frame and seek that confirmation to take our entries short. So from that, all we had was this series of an uptrend, right? A low, higher, higher high, and then higher low, higher high, higher low, higher high, higher low, and then this currently higher high there. So at this point of time, we're basically just ranging from this high to sorry, we're just ranging from this high here to shit, why can't I get this right? I just wanna to this low here, right? Boom. So we're in this range from a high to a low, right? All we want to see is either, right? There are two scenarios at this point. Price could basically just come bullish and take out this high to tell us that, okay, price is not yet ready to sell just yet. So we've got to wait for confirmation, right? Or that's scenario number one. Or scenario number two could simply be price could basically just come down, take out this low here to tell us that, hey, you know what, I'm ready to go bearish, right? And then from there we can just look for an area of supply in here that price is just going to mitigate, take our entries from there, our stop loss is just above, and then, you know, try to sell this market to its peak. Now let's play price out and see what happens. So price drizzles around, it just plays in there, you know, no significant break, and then lo and behold, boom, we have a break to the downside, which is a what? This just instantly forms to a break of structure. So if this is a break of structure, then okay, so price is now broken. Price has now told us that, hey, you know what, I'm going bearish, baby. Okay, so if you are going bearish, then we need to see where are you going bearish from, right? So as you can see now, this low here was pretty much created by this high here. So basically the last area where smart money sold before they bought is pretty much this area here. So as you can see, price makes this high, comes down, makes a low, right? Buys and then sells very hard to come and break and take out that structural low. So from there, my last buy to sell is pretty much this area here, which I, you know, basically just refined to this last bullish candle there. So lo and behold, this right here was my entry position, and then my stop was just above it to make it a 4 pip stop loss, right? And of course, looking to target the lows. Now let's play out and see what price does. Okay, boom. So price, look at what price does, right? So price comes, triggers our entry, and then takes us out, right? It's, you know, it's normal, it's part of the business, especially for a day trader, right? People always ask me, hey bro, do you take losses? I mean, like, everybody takes losses, right? There's no trader in this world that doesn't take losses. It's basically inevitable, right? All we do is perfect our risk management, right, in accordance to our knowledge. You know, that's how we handle things, right? I mean, like, in the end, after 1,000 trades, right, you can have 100 losses or 200 or 500 or 600 losses in there, but you know, as long as those remaining trades take you up to profitability in the end, then you know you have a trading system that actually works and that can actually make you money, right? Trading is all about risk management. So with that being said, let's go back and reanalyze our current scenario. So as you can see, price from here, price just was pretty much bullish, right? A low, a high, another low, pretty much an equal low, so liquidity down there, and then a high, high, higher low, higher high here, higher low, higher high, and then what do you see, guys, right? We see a lower low, right? So this right here is basically another confirm, right? And why did price just take us out and then gives us an instant confirmation, right? It basically means that this move here was practically a liquidity sweep, right? This move right here this move that just went above is basically a liquidity sweep. And it's basically insignificant because liquidity has been taken. Price has reconfirmed that it wants to go bearish. So from there we just gotta do the same thing, right? So we see a break, we just need to look for that buy to sell, which is pretty much this little man in here, this right here. This is my POI, the last buy to sell. And now we can just eliminate that, remain with this, and then place now our order there. It's stop just above, right? Yep, boom. So that's a 2 pip stop loss. And of course we are looking to target this low down here as our liquidity run, right? This low, this overall low right here, that's our liquidity run, right? And from there we can now basically just play out price. Now, so we have a 2 pip stop loss with a what's this? It was 100 and something pip, 105 pip take profit target to make it a 1 to 52 RR trade. Okay, so that's an insane RR, guys. So let's see what happens with this trade here. So let's now play price out. So as you can see, price comes up, mitigates this area here, tapping or triggering our entry, and then price goes down. Now the minute price price made a low, right, a higher low, the minute price made this or you can just call it that lower low there, right, which caused the break of this structural point here, my trade went to break even straight at there. So this was like 34 minutes past 13 hours, and this right here, this break here, is 52 minutes past, so it's like it's an average of 20 minutes. So within 20 minutes my trade was already at break even, meaning that I was never gonna take a loss there, even if price could do this and then go up and take out these highs. My trade could just hit break even and then no loss from there. That's what we call risk management. That's how you become profitable in the long term in this industry. So let's now go to the 5-minute chart so we can play this price action a little bit faster and see where do we end up. So there's the price now just basically goes down with news moves and whatever that is. And of course price plays around, price plays around, and there's our take profit target being hit right there. Boom. So that's our take profit target being hit, which is actually this overall low in here that we termed as our next liquidity run, which now has been liquidated. And I hope this video was very informative to you guys, and if it was, then don't forget to like, subscribe if you haven't, and of course you can join our classes and our academy at any time. You can just DM us on Instagram at officialgreenpipsfx, and we'll be more than happy to receive you now. With that being said, have a nice week, guys, or weekend, or whatever. Stay safe. Love you guys. Bye bye.